Hello world, this is episode 34. This is attempt number 3, but hopefully this one all goes correctly. So we're gonna do this again. Episode number 34, Facebook Live 39.6 show, the show that teaches you how to make your money work for you so you don't have to work for your money. Today's episode is another 2MD Finance Show Me the Math topic. We'll discuss what will be the financial costs of going part-time. Okay, so we are going to hopefully be able to share this properly. I'm going to switch screens here. All right. Today we are up to 238 members in our Facebook group, the 39.6 community. I'm trying to get up to 500 members by Labor Day, which is in about 1 month. We have gained 78 new members in the past 4 days. So we are on our way there. Please invite your friends and we'll get there quickly. All right. So with no further ado, this is the Excel chart, and I am just going to briefly go over the effective tax rate graphs that I've done before and are posted on my page. Often we have 2 high earners married to each other, okay? And the US tax system does not favor 2 high earning individuals to be married to each other. The marriage penalty is not nearly as bad now with the current Tax Cut and Jobs Act in comparison to what it was before. However, there are still advantages designed through this tax structure to have one person earning less or not working at all. Okay, so we're going to look at this graph again. As you go from the left side to the right side, this is additional earnings or total earnings you have earned, your adjusted gross income. Okay. And on the left side, this is the percentages which can be associated with your effective or average tax rate or the marginal tax rate. For each dollar you earn, you are going to be taxed at 0%. Or 10%, or 12%, or 22%, or 24%, or 32%, or 35%, or 37%, depending on which dollar that is that you earned. The first dollar you earned of the year is 0, going up to around $25,000. Then the next $25,000 or so is taxed at 10%, and so on. You can think of it as one person earning the income starting at 0 and then going up, and then when that person's income is completed, then the second person's income starting there and then going up. So for example, if one person earns $700,000 of taxable income, the second person's income could be thought of as all taxed at 37%. That's not really how it is, but at the end of the day, when you file your taxes, they just want to know the total number. So when we're talking about cutting to part-time, when you're cutting to part-time, you're losing dollars earned at the far right side of the graph, not the dollars that are taxed at 0, 10, or 12%. It's kind of like making the decision to put pre-tax money into an investment account. Those dollars are saved at your marginal tax rate. They are not saved at your effective tax rate. They're saved at your marginal. And that is what happens when you cut back your hours on the second earner. That income loss was income that was taxed at the highest rate. Okay, so some people who live in very high tax states like New Jersey, they could be paying around 10% in state tax. If there's 2 people who are married and the higher earner is already earning over, let's say, $700,000, the other person's income could be taxed at 37% federal, 10% state, and then another 2.35% for Medicare. That's 49.35%. And that's on every single dollar. And Social Security is taxed at 6.2% for the first 140K. So more than half of the person's money could be taxed. Okay. So if you're in this group right now and watching this, please let me know. I am unable to see people's comments, and I thought I took the old video down because there was a mistake, but it may still be up there. Hopefully I can get this all fixed in a little bit. Okay, so here's the table. Okay, and I am going to get rid of this formatting bar to make it a little easier to see. And I want to make sure that the whole thing is shown here, okay, the entire time. Okay. Sorry for the dings. Okay, so on our left 3 columns, we have person 1, who's a full-time private practice physician, and person number 2, person who's a full-time academic physician. Okay. In this example, one of them makes the private practice physician makes $800,000 and the academic physician makes $400,000. Okay. That's a total of 1.2 million. That's in gross W-2 wages, basically, or that's their wages. That's not their retirement contributions. Okay. Then you have your pre-tax retirement contributions here, the 401k, a 403b, and a 457b. So 19,500 is the typical amount that one can get into a 401k up to age 50. And then in academia, you often have access to 2 accounts, both a 403b and a 457b. Okay, and I'm using UT Southwestern's calculations. And here it is, ends up being more than 19,500 times 2. It's very complicated, but it's $52,000 here. Okay. And then here's a line for Roth contributions, but at a high tax bracket, that wouldn't likely be done. And then the third line here is for a cash balance pension. That's not something likely to exist in an academic place, but more likely to be in private practice. So here that is at $90,000. And then the employer match. Okay, so usually you'll get in private practice, you'll get the additional $37,500 of profit sharing to get you to the full $57,000 into the 401k. And then in an academic setting, you're usually getting some percentage of your earnings. And in this situation, we're using 8.5%, which is what they use at UT Southwestern. And that caps out at an income of $285,000 based on federal limit. Okay, so between these two, the retirement contributions are $147,000 and $76,000, which is a total of $223,000, all pre-tax money. Okay, so the total compensation here, okay, is actually the sum of both the gross wages plus all of the employer contributions. So here's $927,500 plus $424,225, and that actually ends up being $1.351 million. These are completely made up numbers, just so you know. I'm just making an example. Now, then we have to figure out how much tax is being paid. So you have to take the income and subtract all the things that are tax deductible. So all of the pre-tax retirement numbers, dollars are not taxable at the federal level, although they are taxable for Medicare and Social Security. Okay, flexible spending accounts for healthcare or dependent care. For healthcare, it's a $2,750 total per person, and then for dependent care is $5,000 per family. So we always max those out every year. And then there's a medical and dental insurance premium. So I put this in at $500 per month or $6,000 per year. That is all pre-tax. And the benefit of FSA money and insurance premiums, you don't have to pay Medicare or Social Security or federal or state tax for those dollars. So you get 3 different rows here. One that are deductions for federal tax, one that's deductions for Medicare tax, and one that's deductions for Social Security tax. Okay. Now, then I have these rows, which are to calculate how much tax you pay. So we have federal tax, Medicare tax, and Social Security tax. Each of them has the number of dollars of taxable income, the effective tax rate or the average tax rate, the marginal tax rate, and the total tax in dollars. Okay, so the taxable income for the first person is $777,000. Now, that reaches the 37% marginal tax rate, but not all of those dollars are taxed at 37% because we have to go up those numbers, 0, 10, 12, 22, 24, 30, and then up to 37%. Okay, so on average, it is 27.7%. Now, for the next person, I have it calculated such that the effective tax rate is as if their income started after the last person's dollar was made. So all of their dollars are taxed at 37%. So the effective tax rate is also 37%. So this person earns $334,000 of taxable income, but it's all taxed at 37%. So that's $123,000 of tax paid. Whereas the person making $778,000, which is more than twice as much, pays only $215,000, which is actually less than half as much. Okay, so because this is a lower effective tax rate. Then we have Medicare tax and Social Security tax. Social Security tax is the same for both people because the federal Social Security limit is based on an income of $137,700 this year. So they each pay $85.37. Okay, so we add these three taxes together, and the person making the private practice physician is paying $240,000 in tax, and then the academic physician is paying $141,000 in tax. That's a total of $382,000. Their total compensation numbers here are insane: 930 plus 424 for $1.35 million, and they pay a total of $382,000 in tax, and their net compensation is $970,000. The childcare costs here we're going to just throw in because if somebody goes part-time, often they're doing it because they are going to take care of kids, but not necessarily, but I'm just going to throw that in here. I would be very happy to be able to take a couple more days off and take care of the kids, although I'd probably still want help with that anyway. But regardless, $54,000 is about $4,500 a month for childcare. So you have a net compensation minus childcare of $916,000. That's a ton of money. I could have used smaller numbers for examples, but these were round numbers and easy to work with, so I just did. So in our next three columns, the second person cuts to part-time, and instead of making $400,000 is now making $200,000. They're going part-time by going to 0.5 FTE. Okay, now I can adjust these numbers, and this Excel sheet actually is going to be uploaded to our Facebook group. There could be still some mistakes, and hopefully I will find them and catch them. If you find any, please let me know. But if you're on my Facebook group, you'll be able to go in here and download it. Okay, so in this situation, the first column, all the numbers are exactly the same, okay? Because that person's still working full-time and is still reaching the top tax bracket. The second person is going to have a lower income, and so they're going to have a lower employer match because it's based on a percentage of 8.5%. So at $200,000 of income, they get a $17,000 match. So you lose part of the match when you cut back. Okay, the total contribution of retirement accounts here is $69,000 versus $76,000 for that second physician. Okay, so the total compensation now, instead of being $1.35 million, is $1.14 million. The pre-tax deductions are really the same. However, there's, again, less money going into retirement, so there's less of a deduction from the federal tax. And usually with a part-time person, you're going to pay higher premiums. So in this situation, I went from $6,000 to $13,000 as an estimate of the increase of $7,000. Now, the first person is still working full-time, so could have actually taken over the medical and dental costs. But often in private practice, you may still have relatively high premiums in comparison to an academic facility. And academic plans often are really good insurance plans and get you access to all the benefits that they get through the academic institution. So in this example, we chose to use the benefits from the part-time physician, even though the premium had gone up. Now, the federal tax deductions are then going to be less, but only slightly, okay, because the decrease in retirement was actually offset by the increase in the cost of insurance. Now, from the federal tax standpoint, there's a substantial difference now that one person is part-time. It went from $400,000 to $200,000. The taxable income for the second person is now $127,000 instead of the $334,000. I'm going to scroll up to make so you can still see the whole thing. Sorry. Okay, $127,000 versus $334,000. So all of the money is still taxed at 37%. But now the federal tax is only $47,000 instead of $123,000. That's a tax savings of $77,000. Medicare tax is $4,200 versus $9,100. That's a savings of $4,800 in Medicare. Social Security is still capped out above $138, so there's no benefit in Social Security tax. So the total taxes are $60,000 for the second physician and $141,000 when that person was full time. Okay. The total tax that is now being paid is $300,000 instead of $382,000. So it's almost $82,000 of tax savings by going part-time, but also as a result, had a decrease in compensation. So the total compensation difference here from $1.35 million down to $1.14 is $207,000. That's the $200,000 less, but also a smaller match. But the taxes are $81,000 less. So the difference in total compensation here is actually only $126,000. It's nowhere near the $200,000 that were decreased. Okay. Now, if the childcare costs were to cut in half from $54,000 to $27,000, then that second scenario has that net effect, because we can now use that childcare savings to offset some of the loss of income. So the net compensation subtracting childcare is now $817,000 instead of $916,000. So it's basically a $99,000 difference. So that $200,000 decrease in income ended up being only $99,000 of decreased compensation, or a decreased net effect. However, you're still now replacing your work for childcare. So it's not necessarily the best comparison. If you throw away the childcare difference, it's a $126,000 difference compared to the $200,000 loss. So cutting down part-time, which is 50% of the income, ends up being only a loss of $125,000. And the total compensation that they have is $1.14 million versus $1.35 million. So if I just look at that ratio, equals 1.14 divided by 1.35. And I'll just do that on my phone because the Excel spreadsheet, I'm not good at numbers on Mac, and I don't know how to change the decimal points. 85%. So you have an 85% or a 15% reduction in total compensation. And then total net compensation difference is 844 divided by 969. And that is 87%. So ends up being a 13% reduction in total compensation, but a 50% reduction of work for one of the people, or 25% reduction of work of all people. So there you have it. That is this spreadsheet, and I will upload this to the Facebook group if I can figure out how to do that. If you like it, please let me know. If I need to change anything, please let me know, and I'm happy to do that and upload another version. Please invite your friends, and we can meet our goal of hitting 500 members in the next few weeks. There you go. That's it for today on the 39.6 Facebook Live show. I'd like to say hi to the people who are here. There are 4 people in the chat, but it won't show me who it is. So I apologize, and hopefully can figure out these issues with Be Live. All right, everybody, have a great week. Until tomorrow.